Good morning. My name is Yasha and I help young men invest in the stock market. So today we are going to analyze Bank First Corporation with the stock ticker BFC. So if you are interested whether you should buy this quite good stock, it actually seems quite good. So if you are interested in buying it, or if you just want to know how to analyze stocks as a general, then this video is perfect for you, okay? Now, as always, we are going to analyze it using this little Canva presentation that I have right now here. So let's begin. First of all, why should you even listen to me? As you know, my name is Yasha and I help young men invest in the stock market. So when you have more trust for me, the first link in description will take you to my stock market coaching. So see you there. Now let's be a bit more serious. So today let's start now with the actual analysis. So this is going to be very simple, beginner friendly, straightforward. So grab a piece of paper, grab some pen, whatever, write some notes down because you will learn a lot, okay? Now generally, as a complete beginner, you should care about the following 6 things whenever you analyze stocks. You should care about chart, profit, debt, money on the bank account, value and price. Now here you have some quick facts about Bank First Corporation. Obviously it's a bank, it was founded in 1894 and it seems like an amazing buy stock, so I'm excited to see what comes, okay? Now here is immediately the first thing that I want to tell you. So whenever you analyze stocks, you should pay attention to when they were founded, okay? Now Bank First was founded in 1894, which is quite an amazing sign, okay? Because the older the company are, the better investments they are and safer investments they are, okay? That's a rule of thumb. Because when you have as some old company like this one, for example, almost 120 years, when you have this 120 years old company, it's much safer and much better investment rather than some startup that was founded maybe 2 years ago, because this bank survived so many crises. It survived World War II, World War I, like the Great Depression, the Black Friday, then I don't know, stock market bubble in 2008, dot-com bubble, Corona crisis. It survived literally everything in the modern history, you know? Whereas one startup that was founded maybe last year didn't survive any crisis because we have not been in any crisis, you know? I mean, any major crisis. So for that startup, we don't know what would happen actually if a stock market crash would happen. But for this bank, since it survived so many crashes already, we know for sure that it will have higher chance of survival, okay? This is important whenever we analyze companies. So as a rule of thumb, the older the better. And now we come to the chart, and for chart we have an instruction that it has to grow for all 10 years. Now what exactly does that mean? That means that I will draw a little exponential line, kinda like that, and we are going to compare the actual stock price chart, which is the orange line, with this black line, and preferably they should follow each other because that would mean that Bank First is growing, it's expanding, it's more and more profitable, which will just bring us on the long term better returns. You know, it will bring us money because we are young, we want money and we want women. It's that simple, okay? Now let's take a look at the chart here. Does it follow that black exponential line? Yes, it does. It's actually one of the few stocks that we analyzed that it's actually following that line, because you can see, yeah, it goes a bit up and then maybe down, but up, and so yeah, it's amazing. It follows. Nothing more to say about here. It's a nice chart. This is what we want to see, okay? Now we come to the profit, and for profit we have an instruction that it has to be in plus and it has to grow as well. Now here is the very same story. We will draw a little exponential line, kinda like that, and we are going to compare the profit chart with this black line, and preferably it should grow exponentially. Okay, now what do we have here? Here we have exactly the same, you know, like the profit is growing, look, it goes like that, and then so on. So it's an amazing chart as well. Okay, I couldn't find the data for 2014, so I'm sorry for that, but other years that we analyzed are amazing. Okay, now we come to the debt, and we have an instruction that debt has to be low, and preferably it should also decrease through the years. Now here again, I couldn't find data for 2014, 15 and 16, but other years seem to have like a growing debt, you know, you see it goes like this and then down. So that's generally a bad sign, because debt is generally bad, okay? Because if you think about yourself, if you have more and more debt, is that good for you or bad for you? Are you happy to have more debt, or are you stressed and desperate and sad to have more debt? Obviously you are fucking stressed, okay? Because you need to make more money in order to repay that debt, because you have a growing debt, right? The same is with companies. So if bank first has growing debt, that is more stressful for them. They have to worry more, they have to make more money, they have less profit, because they have to repay that higher debt. You know what I mean? It's that simple. Just whenever you analyze stocks, like, companies are similar to us normal people, you know? So whenever you analyze stocks, literally just think from your perspective as well, okay? If I have more profit over the years, is that good for me? Yes, it is. If I have more debt over the years, is that good for me? No, it isn't. You know what I mean? It's that simple. It's that simple. So no, growing debt is bad, which is why we marked this as a bad thing, okay? Now we come to the money, and with the money we literally measure money that they have on their bank account, okay? Just like you are a young man, your grandma gave you 500 euros for the last Christmas, so you have that money on your bank account, okay? Here we measure the very same money, okay? And preferably they should have more money than the costs, okay? Because that will make us a positive bank account balance, which means that they, I don't know how to say, but the more money they have on their bank account, so the more money they have for maybe some bad things that might happen, okay? Because on the stock market, unexpected events happen all the time, okay? Let's say that this bank gets robbed, okay? So what would they do? Obviously the stock would drop, but still they would have $39 million in pure cash that they could spend to maybe save the situation or something like that, okay? You know what I mean? So the deposit, if bank account balance is positive, that means they have money on the bank account, then that's good for us, okay? Now, do they have more money than the costs? Use your brain, because you are a smart man, as I always say. They have plus $39 million on their bank account. So obviously they have positive bank account balance, which is an amazing sign for us, because they can cover some unexpected event that will for sure happen in the future, for sure. So that's a good thing as well. Now we come to the valuation, and obviously as good investors we want to invest in stocks that are undervalued, okay? Now we measure valuation by two things. First thing is called P/E ratio, and the second thing is called intrinsic value, okay? Now, as a complete beginner, this might sound a bit complicated for you, but trust me, just follow me, I will explain it very well, okay? Now, P/E ratio is actually used to measure how valued, how undervalued Bank First is in comparison to its competitors and the whole stock market, okay? Now, preferably, P/E ratio as a rule of thumb should be lower than 15. Why exactly 15? Because 15 is the average P/E ratio from the whole stock market. So obviously, whenever we invest in stocks, we want to invest in undervalued stocks, okay? The stocks that are below the stock market. That's why lower than 15. And what do we have here? P/E ratio of Bank First is around 12, let's say. So it is actually lower than 15, which makes us to see that this stock is actually undervalued in comparison to the stock market, okay? And now we come to the intrinsic value, and intrinsic value actually tells you the price that Bank First should have per stock, and then the actual stock price is just the stock price, okay? Let's take a look at the example and you will immediately understand what I mean, okay? Now, intrinsic value of Bank First is $98. What does that mean? That means that based on some calculations, the fair price of Bank First and the price that they should have at this exact moment should be $98. But in reality, their price is actually $93, so $5 less. You know what I mean? Intrinsic value tells you the price that Bank First should have, but then the current price is the current price. It's that simple. And since intrinsic value is by $5 higher than the current stock price, that means that the Bank First Corporation is also undervalued here. So overall, Bank First is undervalued stock, okay? Now you can find both data for P/E ratio and intrinsic value on the internet. Just write Bank First Corporation P/E and Bank First Corporation intrinsic value and you find the data, okay? And now we come to the price, and instruction tells us that price has to be lower than 150 euros, or since you are from America, $150, okay? Now the price of Bank First is $93, which is below 150, so price is also, based on our evaluation, not overpriced, which is an amazing sign, okay? Now $150 is kind of the limit that I set for myself, because in my opinion, stocks that are priced above $150 are overpriced stocks. And I don't want to buy expensive stocks. I want to buy cheap stocks that are underperforming and that have the potential to grow, and then I make money with that. It's that simple. And for you as well, especially you are a young man, you have a tight budget, so you need to think smartly about it, okay? Because if you buy one stock that costs $400, what will you do if you have only $400 on your budget? You know what I mean? So the cheaper the stocks, the better, okay? Obviously don't buy stocks for €1 or $1, because they are probably trashy stocks, but this one around 100 is a good pick, you know. If you have like $400, you can buy either 4 shares of this one or 4 different shares per $100 each, you know what I mean? So that's a good thing, okay? Now below 150 is the rule, don't forget that. And now we come to the final evaluation, where we are just going to summarize everything that we found out about the Bank First Corporation so far, okay? Does the chart grow exponentially? Yes, it actually does, so that's a good sign. Does the profit grow exponentially? Yes, it does as well. If you don't believe me, watch the whole video again. Do they have a decreasing debt? No, unfortunately they don't, because the debt is growing. Do they have money on the bank account? Yes, they do. According to my research, they have $39 million. Is the value undervalued? Yes, it is. And is the price of Bank First below $150? Yes, it is. So, should you buy or sell? In my opinion, you should buy this company, or at least put it on a watch list. It's an amazing company. It's one of the hidden gems that we found, because they are growing, they are increasing the profit, they are reinvesting money back into the company to grow as well. They have low debt actually in comparison to the whole cash that they get inside the company. They are paying dividends as well, as you can see here. Look, let me show you. They have like 1%. It's not that much, but still they are paying it. Look, the graph is increasing. It's below $150. It's undervalued. It's actually quite good company, you know. So if you are interested in banking business, then put at least this company on the watch list because it's profitable, it's growing, it's expanding the business, it's reinvesting the money back, it has low debt. So yeah, quite a good stock, quite a good pick actually. My friend commented the last time, like, yeah, put some buy stocks. So yeah, here we found another one. I'm quite happy about it. So yeah, if you want to know more about stock market investing, click the first link in the description and I will teach you everything about it. Click also subscribe and join me on this journey to become rich by stock market investing. Do the hard work and see you on top of the world.